Welcome to another Prospectus review here on L.E.A.R.N Invest. Today we're going to be going through the Image Plus Consultants Limited, otherwise known as Apex Radiology. We're going to go through their prospectus. This video is meant to be a high-level summary of the prospectus, so we'll break down the key areas to help give you an understanding as to what the offer is about, how much they're seeking to raise, how they're going to use the funds, what's their dividend policy, etc. All the important things that you should know before making a decision to buy or not to buy. So that's what we're going to go through today. So let's get started.
Learning is the key to successful investing, and who doesn't want to invest in some way?
Here at L.E.A.R.N Invest, we focus on financial education, all with the aim of sharing our knowledge on personal finance, investing, and building wealth. We do this on the foundation of our faith in God.
If a more holistic approach is what you need, check out our Grow Faith-based financial coaching program.
Find out more about us at learngrowinvestclub.com
and follow us on all social media platforms at Learn, Grow, Invest.
All right, welcome back. Let us pray. Thank you, Lord, for this day and for the ability to produce wealth. We pray, Lord, for your insight, revelation, understanding, and knowledge to be able to make wise investment decisions for ourselves and our families. In Jesus' name we pray. Amen. All right, guys, so welcome back. I know that you've been waiting on this video, so I'm not really going to take too much time here to go through the intro. As I said, we're going to go through the Image Plus Consultants Limited prospectus, otherwise known as Apex Radiology. Just a few things before, definitely have to say this part. The information reviewed here is for discussion, education, entertainment, and illustrative purposes only, and should not be construed as professional financial advice, solicitation, or recommendation to buy or sell any securities. We're not financial advisors here at L.E.A.R.N Invest. We're financial coaches, so we can guide you as to how, but we can't tell you what. Okay? All right, so this is the format of our prospectus review. We're going to look at the company history, get a bit of understanding as to how far the company is coming from, maybe what some of their key milestones are and the services that they provide. Next, we look at the offer. We'll try to get an understanding as to how much they're trying to raise, what are the different pools, and what's the subscription price per pool. Then we'll look at the financials. This is going to be a high-level summary. We actually are going to be doing another video that will be linked in the description regarding an overview of the financials only. And we've done this because there are persons who will say to us the full prospectus review as we would normally do it would be too long. So this is going to be a very short video, maybe 30 minutes, 35 at most. And then tomorrow we'll spend about 45 minutes going through the financials only for the last 5 years. So be sure to check that out. Next, we'll look at the dividend policy that they've set out in the prospectus. We'll talk about it. They had an interesting fee structure before, and they're proposing to change that, and they've outlined their dividend policy. So we're going to talk about that, and then we're going to talk about how to apply. Okay. So in terms of the videos that we'll be covering this week, so we have this review now, the prospectus review that you're watching. We're going to have the financials review tomorrow. Then on Thursday of this week, we'll have an interview with the CEO of Image Plus Consultants Limited. That's Mrs. Keisha Anderson. So we'll get a chance to hear from her, get some of your questions answered, and see if we can make an informed decision about this prospectus. So we'll start with the company history, as I mentioned before. So Image Plus Consultants Limited, otherwise known as Apex Radiology, is a private medical imaging company that was established in February 1996. Their services include multiple modalities such as X-ray, ultrasound, CT scan, fluoroscopy, and nuclear medicine. So those are the different areas that they would cover. And then it says their centers are interconnected and allow for teleradiology, which is also web-based appointment booking and direct access to referring physicians, making the company leader in patient management and care. All of that means that they have the opportunity to provide services over the phone as well, or remotely. It's not always going to be an in-person thing, depending on, of course, where the referring doctor is, etc. The company currently operates at 4 locations. We have 3 in Kingston and St. Andrew, and 1 that's in Ocho Rios. And of course, they would have alluded to plans to expand, whether through acquisition or otherwise. So we'll talk about that a little later. In terms of features, now all of the information that I'm going through here is in the prospectus. So I'll leave the link to that in the description for you to go through. So what we've done, as I said before, is just summarize it. So everything that I'm reading would be information that was taken from there. So key features that they've mentioned: patient-friendly, non-clinical environment, 48-hour turnaround time for some of their routine exams, interpretations within 1 to 2 hours, flexible patient schedule, extended operating hours, including weekends, and their reports can be delivered by courier, fax, or email, availability of second opinions and consultations, availability of subspecialty interpretations at no additional cost, and standardized fee schedules, right? So those are some of the things that they would have listed in their prospectus in terms of some of their key features or services. Next, we have their competitive strengths. That would be scale and position. So they would be the largest provider of the services that they offer currently, meaning they do have competitors, but they wouldn't have the same reach in terms of locations that they would have. I also imagine that they're probably the largest in terms of market share as well. But I mean, of course, that's just based on an assumption. We don't necessarily have that confirmed. In terms of comprehensive multi-modality diagnostic image offering, they have competitive pricing, facility density in their highly populated areas, a strong relationship with payers and diversified payer mix. That's definitely one of the questions we'll be asking about. How do they see those relationships possibly expanding? Maybe what payers don't work with now, etc. Just to understand that relationship a little bit more. They do have an experienced and committed management team that would have been outlined in the prospectus. So definitely be sure to read up on the management team. They mentioned their business strategy, their plans to expand their network, their operating efficiencies, and then strong relationships with experienced and highly regarded radiologists. So this field that they're in does require the expertise of specialists, of persons who are well trained and have good experience. So that's something that they outline as a competitive strength in their prospectus. They also have here what is their medical and imaging equipment at their 4 locations. So we mentioned 4 locations before. These are the machines and imaging equipment that they would have at those locations. So depending on the test that is needed to be performed, you would go to the appropriate location. All right, so that's it for the overview of the company. I will say, and let me actually just bring up their website as well. I think that it does provide a fair amount of information here. So it's apex.radiology.com, and you'll see more information on their services. So what we do here, the different categories in terms of the types of imaging and some special procedures here. Again, this is something, if you want to understand about the company, I know some persons would have mentioned that they haven't heard about the company before. This gives you a chance to learn more about them. They have their locations listed here, opening hours, etc., contact email, and so forth. So please, again, you want to do your research to understand the company before you make a decision. So please be sure to do that. In terms of the offer details, you want to, well, it's listed here. So they're issuing 247,889,000 new ordinary shares, and the shares are priced at $2 each. So these are the pools that we have. So 182 million goes to the public, and the remainder goes to the different reserved pools. So we have the employee pool, key stakeholder pool, and broker pool, and we're seeing the different percentages here in terms of the percentage of newly available shares. And the brokers are, well, the reserve pools are going to be broken down in the very next slide. So this is what we have here. So we have the employee pool, which is for permanent employees and the directors of the company. We have the key stakeholder pool, which is going to be determined by the company. So it's going to be their referral doctors, suppliers who are determined by the directors to be integral to the long-term success of the company, any consultants or professional advisors, and then you have the broker reserve pool. For any of these pools, if you suspect that you may be eligible, it's important to reach out to the company to confirm, because the broker would typically be sent a list, and if you apply for that pool and you're not on that list, you're not going to be able to get those shares. So just bear that in mind. This is an overview of the offer itself. So the prospectus would have been released on December 16th. The opening date is December 28th at 9 a.m. Closing date is scheduled for January 11th. Now this closing date can change depending on when the offer is taken up fully. Usually we see for IPOs, this one, based on the fact that they're raising 495 million, I suspect it should at least go the week, but usually we say with IPOs treat the opening date as a closing date. I'm not necessarily sure, you may have that situation here, but just in case, if you're interested, best to apply sooner than later, and I'll show you how to do that on JMB Moneyline a little later. Minimum subscription, 5,000 shares. Since it's $2 per share, that will be 10,000 US dollar, 10,000 JMB dollars minimum, and there's a standard fee of $172.50. In terms of basis of allotment, refunds, listing shares, these are all going to be based on when the offer closes. So from the date that you see the offer is closed, 6 business days after that, look for the basis of allotment to be announced. 10 days after that, look for refunds to be in your accounts. Of course, these may vary by a day or two, as we have seen in the past. And then the listing of shares 3 to 4 weeks after the closing date. Typically, you see it around 21 days, which would be about the 3-week mark. So one of the things we look for in terms of an IPO prospectus is use of funds. So the company has stated that they're going to be using the funds raised in the following ways. So they're planning to acquire property to be identified in Kingston, and the key word I see here is to be identified. So I'm not sure if they've found this property already, or they're maybe in negotiations for one, which is suitable to relocate their largest operations, thereby ensuring the quality of their revenue and allowing for even further expansion of their offerings. So naturally, this would make sense for the type of company. Next, we have procuring suitable new biomedical equipment to offer additional diagnostic modalities to their Oterius location. So that would have been their most recent location. And what they want to do is add additional equipment there. And finally, expand their offering of interventional procedures, maximizing on this fast-growing area of diagnostic imaging. The prospectus speaks to what this type of procedure is. I won't go into that detail here, but please, if you want to learn more about that, read up on it. It said with the capital raised via this medium, the company will be able to pursue these initiatives simultaneously, meaning they're not going to be waiting. They're going to be able to pursue these things right away. So it's something that you should at least be able to get updates, maybe hopefully within the first few months of the company being listed. So this will allow for reduced time to impact and an exponential growth in revenue without similar attendant costs, hence improving the profit margin and increasing shareholder value, right? So they're saying that these things will help overall the profitability of the company. So that's it in terms of the offer details. What they do have in the prospectus as well is they will usually break down the existing share position and the share position after listing. If you're interested in seeing that detail, be sure to check that out. It goes into great detail as to how many shares are available, what the share position will be, and so forth. So let's look at the financials now. So this is going to be a high-level summary, as I mentioned before. We're going to go in depth in the financials in another video. So we see where annual revenue for their financial year ending February 2022 was 777 million, and that would have been a 27% increase from 2021. Total assets stand at 447.4 million. Net profit before tax would have been 113 million, and that would have grown 318%. That's a very interesting number. That's something that we definitely want to find out from the CEO, what would have attributed to that growth. They did show a breakdown in terms of total number of procedures. I think that's a very interesting number to watch, as that will show us how the company is growing, right? Profit before tax stands at 14.5%. Shareholders equity 266 million. They'll show that breakdown a little bit later, so I'll get to that. And we have return on average equity and return on average assets shown on the screen as well. In terms of their revenue breakdown, this is what we see in terms of 56% being from private patients, and then 25% being a partnership with the Ministry of Health, 15% being health insurance, and 4% being other. So this is the current makeup. I definitely see where, based on, I guess, how I read through the prospectus, and this is a question I'll be asking about as well. How do they see this area growing in terms of, as revenue grows, which areas are they seeing opportunities for more growth? I imagine that private patients may be an area of focus, but we're not necessarily sure which one is the most profitable or anything like that, right? So that's something to understand more about. Revenue for the last 5 years. So we say 2018, revenues were 352 million. In 2022, it was 777 million. So it would have more than doubled in the last 5 years. Remember that number that I mentioned in terms of number of scans, that was 46,371 in 2022, which would have been more than 11,000 than what they would have done in 2018. What I did note as well, you notice you'd have seen a dip in 2021. I suspect that would have been based on the pandemic. And so they would have maybe been more normal in terms of scans and procedures done in 2022. If you remember earlier, this year would have been released in terms of back to normal, right? So cost of sales is there, and gross profit would have been 505 million for 2022. So the last thing I'll say on the previous slide here, since the Ocho Rios location was recently opened, I suspect that we'll see more growth in terms of the number of scans maybe going into 2023. So that's something to look out for. This is a list of their expenses. So there are some key things here that I saw that I'd like to have some more information about, that we hope to answer in subsequent videos. First is the director's fee. That is a major line item in terms of expense. There's more about that later, but that's 66 million for 2022. Next one that is worth asking about would be salaries and related expenses. that would have grown close to 30%, I believe it is, for 2022. Now, it could be that based on the talent they had to retain, I figured they would have been preparing to come to market as well. Those typically see an increase in payroll for companies that plan to list. Let me say it that way. So this is not uncommon to see an increase, but for context, it's always good to hear from the company to find out what would have led to that increase. Is it permanent staff? Is it certain key roles, etc.? So that's something to find out more about. And also there is bad debt that was written off for 2022 to the tune of 5.1 million. There is a breakdown of that of the trade and other receivables that we'll see on later slides, but that's something that you'd want to watch for, because understanding how they treat bad debt, I believe the MD&A would have said it might have been best practice why it was written off. I'm not honestly sure right now, but I'll double check that. But if somebody remembers and you're in the chat and you can tell me now, that would be good. But I believe that's what it said based on, I guess, the time of the year, how long it was aging, etc. But that is something that you want to watch moving forward. And yeah, so I think those are the main things that we want to understand more about. I'll talk about that a lot more when we go into the financials review. Next, we have adjusted profit before tax. So they have seen their most profitable year in 2022. And of course, that would have been the year that would have done the most scans to date, etc. Okay, so we see directors fee paid as well. There is more information on that, as I said, so I'm not going to talk about it here. Adjusted profit before tax for 2022 was 179 million. In terms of their assets, not much we're going to spend on this slide. Usually we look at cash and cash equivalents, so that position has been growing. And we also look at the trade and other receivables. As I mentioned, that's 139 million. They would have written off 5 million. So that means that would be a small percentage. Well, how much would that be? That would be a small percentage in terms of their overall amount outstanding, but it's still to again understand how that trends. In terms of property, plant and equipment, that would have been 206 million for 2022. So that's the key things that we'd look at least at a higher level. So trade and other receivables, as mentioned, we do have it broken out here in terms of less than 30 days. Then we have 30 days but less than 60, more than 60 but less than 90, and then more than 90 days, right? So this is the breakdown. Again, I hope they include this maybe for every report, or at least for the annual report, so we can see how this trends. But this is the current standing, and I believe they would have had some commentary on it as well in the prospectus, but it's definitely something that we're going to be asking the CEO about when we meet with her. In terms of their balance sheet, we see the breakdown between assets, equity, and liabilities. So assets would have been growing. We see equity has grown as well. And of course, liabilities would have stood at, let's see, somewhere, well, it's hard to see the graph based on the actual numbers here, but a little bit shy of 200 million in terms of liabilities. And of course, the assets would be the sum of both equity and total liabilities. In terms of return on average assets, that would have stood at a little bit under 25% for 2022. We saw a decline in that for 2021, but then it would have been at peak for 2022. Next, we have return on average equity. That's a little bit below 45%. I think it was about 43% that we saw on a previous slide. So that's the breakdown that you're seeing there. In terms of retained earnings, that's at 261 million as at their 2022 financial year. Again, the reason why I'm just scanning through these slides is that we're going to go through these in depth for the video tomorrow. Okay. In terms of their cash position for 2022, we saw 51,100,000, and we would have seen cash from operating activities at 96 million, cash from investing activities negative 27, and cash from financing activities being negative 41. So those are the numbers based on the last. What we will do is see, well, likely there is data on at least the first 6 months of the year. Hopefully we'll find that when we go through the financial statements to give us an idea as to how they're trending so far for 2023. In terms of their growth plans, it mentions that they're targeting a combination of organic and inorganic growth. So first, they mention they're planning to increase their footprint through acquisition of other performing entities. So I've mentioned that before in terms of their growth strategy. Next, we have increasing modalities offered in keeping with referring physician needs. So based on what doctors are asking for, maybe patients' needs, they'll increase in terms of those services. Next, continuing to attract competent and highly regarded talent, and we did see an increase in salaries, so that may actually grow along with, offering new services and maybe expanding locations. And then of course they're seeking to manage core efficiency, growing revenues at a faster pace than cost, right? And that's going to be the key to profitability for them. So let's talk about the dividend policy. It says here, so they listed two things here. There is a payout ratio, which says for the first 2 years after listing, up to a cap of 55% of distributable profits will be made available, subject, of course, to the company's need for working capital. That's standard verbiage, right? So they're saying, if we need the money, we won't pay it out, but they plan to pay it out, okay? So this policy is subject to review. And then next we have payout frequency, and it is their intention to consider dividends twice per year. So that's something, if you're a dividend investor, something to take note of. So it says in the 5 years preceding the release of the prospectus, the company had not declared a dividend. However, the persons serving as directors were earning fees and would have seen that breakdown of the different fees for each year. So if you consider that fee payout, similar to, I guess, the amount of dividends that they would plan to pay, that's one way to look at it. It says here, going forward, the directors have resolved that the company will immediately discontinue that practice that I just mentioned at the above rates, and the fees will be restricted to the normal and customary amounts paid by publicly listed companies of similar size for directors' fees. So that statement of similar size, I'm going to be asking about. So how exactly is that size going to be measured? And then it says the company declared a dividend of 30 million on June 30th of this year, and that was paid on November 30th. Okay, so we would have seen that for the 6 months financials for their 2023 financial year. And then of course that breakdown again that we mentioned. Yes, Omar, it's interesting to me as well. So I want to learn more about it to see if I can understand it a little bit more. What you see here is directors' fees in terms of percentage of adjusted profit before tax. So in terms of, and I guess it would be an incentive for the directors. They would have been a privately held company before. I mean, there's nothing wrong with paying and rewarding directors in that way. It's just to understand what that payout ratio is going to be moving forward if you're going to be investing in the company. All right. And then finally, let's talk about how you can apply for this IPO if you're interested. So as we said before, JMMB Moneyline is sponsor for this video. So of course it is available on JMMB Moneyline. They are the lead broker for this offer. So what I'll show you here is a screenshot of, so when you log into your Moneyline account, if you don't have an account, then you'll need to open an account with JMMB, and then you'll have access to JMMB Moneyline. You go to Let me actually try to bring that up here. 1 second, please. Let me know if you have any questions. We're actually about to wrap up here. So if you have questions, just let me know. I can take a couple of questions before we close. Okay. So I really want to thank JMB for providing this demo account. So I don't need to log into my own Moneyline account here. So you go to other services, stock market summary. You should see the option to buy stock. Then from here, you'll see an IPO section. You click on that, and then you'll see the different pools here, including the general pool. So if you're a member of the general public, then that's what you'd select. And then you click on continue, enter quantity in terms of the number of shares. And then, of course, the order type is going to be market price because it's one subscription price. Then any notes that your advisor may inform you to put. And then you hit continue, and that would be you submitting your application. So that's how you'd be able to do it using JMB Moneyline. So let me go back to this slide here. Again, I want to thank JMB for sponsoring this video. In terms of other ways to apply, since it opens next week, I'm guessing that maybe other brokers may be included, but at this point, I'm not aware of any other. What I will say is that I see the statement from Shelley saying so much money for a director's fee. I need a company to ask me to be their director. Yes, I mean, as directors / owners of the company, they would have had some incentive scheme in place for them. As I said, that's not abnormal, because remember, if you're part owner of the company, then you'd have had to put up something. You put up money to have shares in the company, so that fee, or maybe just like a performance benefit or revenue benefit, it really varies and it depends on the company. So that's something that they would have had in place. I am happy to see that they said that they're going to discontinue that current practice and then try to make it match what the industry standard is. I just need to determine, as I said, based on size, how is that size measured? That's the part that I'm interested in. In terms of other ways to apply, I mentioned that already. Just stay tuned, and hopefully we'll see or hear about other companies. So Romario, what negatives do you foresee? What I would typically do for this review is go through the highlights. In terms of negatives, I want to know what specifically do you have in mind if you're talking about the potential risks for the company. That's something that we will typically look at depending on the type of risk. So let me actually try to bring up the prospectus here and go through some of the risks of maybe investing in this type of company. So Marlene is asking, how did they value the company for the IPO at $2? So it's an arbitrary number, Marlene. So based on the number of shares, so okay, let me take a step back there. Based on the valuation of the company, so a company is going to be valued before they list. Based on that valuation and based on the amount of money you want to raise, then you can determine a price for that share. Now, they could have just as easily issued 495 million shares at $1 each. They have chosen to issue 247 million shares at $2 each. It's an arbitrary number. They determine it, and I guess they would have thought that that's the price that they wanted to go with. So it's just really for you to determine whether or not that price, but price and value in this case, it's the price is based on the number of shares that they're issuing based on the current valuation of the company. Okay, so looking forward to, yes, so I'm hoping to go through the financials in depth tomorrow. That for me is a very important step in analyzing these offers. You want to go through the numbers, see if there are any trends that stand out and any questions that you may have for the company. So when you say negatives, yeah, what do you mean, Romari? So let's bring up that, bring up the prospectus, because they would have spoken about certain risks for the company. So I'll go through that in a second. Did I discuss how we can apply if we don't have change? So currently, Jason, I'm not sure if there are any other brokers involved. We would have to find out from JMMB if they do intend to offer it through other brokers. It seems likely that they may do, because when other brokers have their offer, they do make it available on JMMB. So likely JMMB would facilitate that as well. So it's just to wait to see if it's announced. How do I think the reach will be for the company with a share price? When you say reach, what do you mean? I think, so they would have done, if you look at it this way, if you look at the total number of scans they would have done for the last 5 years, right? So let's say they average about 35,000 in scans per year. 35,000 over 5 years, that's maybe about 165,000 people, maybe under 200,000 people. It's not going to be, as I was saying in the Telegram group, this is not a company where if you didn't use their service that you'd know about them. In terms of reach, I think they'll be, doing the rounds, introducing persons to the company, etc. I know those in the medical field would definitely know them, and persons, partners, suppliers, doctors, etc. So it's something to bear in mind. But I mean, the price is the price, and so it's really based on persons to determine whether or not they are interested based on the overall offer, not just the price. Okay. Orville is saying how much percent of the company is that? What do you mean, Orville, in terms of the shares? So they would have, let me see if so I have the prospectus here. Let me go through. I believe what we have is 20% of the number of shares. Okay, so let me find this one. Hopefully this is a question you're asking. By the way, I'm not sure. So let me share my screen here. So we see here new shares as a percentage of issued shares post invitation is 20%, and that is standard, right? The minimum you have to make available is 20%, so that's what they have here. Okay. Do I believe they may be targeting investors more for the long term or not for the short term? Well, that question, Bipin, is that every company, I believe, targets investors for the long term because the company intends to be around for a long time. So, I mean, if you're asking me if they're trying to attract flippers, I don't think any company wants short-term investors really. Okay, so not sure if the company will be a growth stock. Those machines expensive and delicate. So a couple of things, Marlene, that I look at. So I wanted to get into my thoughts of the company, so I'll do that now. In terms of how they're positioned, I think so. Remember, part of the IPO proceeds are going to be used to them acquiring their own building, and it would be good to know the cost of the building they're looking at and the cost to prepare the building to move in. That would be important to note. So out of the money they're trying to raise, how much is going to be used towards that? What's the timeline to move into that building? That will tell you how they're likely to grow for the next maybe 6 to 12 months. If we know that, then we can get an idea. In terms of even without them changing anything right now, I think they are maybe positioned to grow based on just the landscape, meaning based on the services that they offer, based on us coming out of the pandemic. I don't know about you, but almost everybody I know has been sick with something for the last couple of weeks. Everybody's fighting something out. What I noticed is that when you go to the doctors now, the doctors are reluctant many times to do a certain type of treatment unless they do some form of scan, right? So it's either some X-ray, some CT, etc. before you do anything, especially if you want to know the root cause. They're going to tell you to do that scan first. So it's something that I see without them changing anything. That number of 46,000 scans per year should grow. How much it will grow, that's something that we don't know. I'd love to know the numbers in terms of scans that they've done at the Oterius location. That will tell us how much they're likely to grow with that location having more time, things like that. Okay. So Romario is saying negatives: 1, physician recommendation; 2, malpractice claims; 3, contracted radiologists. All right, so let's look at the risks that are there. I have a section about risks. Let me see here. Risk factors, page 33. So the thing I'll say here is that every business has risk, right? Now, in terms of the risk that you mentioned there, again, this is for the company to address. We'll ask the CEO, but so it's important for there to be relationships with the doctors who are recommending them. Now, I assume this is something, because they've been around for 26 years. There would have been maybe some long-standing relationships that they're benefiting from. In terms of, I don't know how those partnerships work. Is it just, you know, some doctors based on the reliability or quality of the scanning? Maybe there are some sort of system in place in terms of how they work. I'm not sure, but that is something that's due to how well relationships are managed, or the process, or the potential turnaround of the scan by Apex to that decision who is recommending. In terms of malpractice claims, there is some amount of that based on the medical field. I think that's something that everybody has a potential risk for. I'm not sure how much that would necessarily be a greater risk, unless it is that they have above normal in terms of those claims. So let's try to look at that in a second. In terms of persons on contract, I think they contract them instead of hiring them, because it would maybe be a little bit more in terms of cost. So let me share my screen here. So section 8 speaks to the risk factors. So it says physician referrals. So they depend on referrals of patients from unaffiliated physicians and other third parties who have no contractual obligations to refer patients. It is a sufficiently large number of these, and other third parties were to discontinue. Okay, so I get what you're saying now, Romario, in terms of if, let's say, maybe they don't have the same referral or otherwise. I'm not sure how you mitigate that risk, right? It's just a risk. So the risk to a company that serves fast food is that person's taste may change, right? That is a risk that every fast food company faces. I'm not sure how you mitigate against that risk. The only thing they can do is probably focus on the service delivery, the reliability of the service, the quality of the scans, etc. That's something, but I understand why they would have listed it as a risk, because it is something that can impact their business. In terms of the next one, in terms of malpractice liability, it says all medical practitioners may from time to time be subject to malpractice claims. Again, that's something that you have to open up yourself to in the medical field. I'm not sure you can remove yourself from that risk, but again, there may be systems or processes in place to ensure that that risk is minimized. So that's something that, you know, I'm not sure that you can do anything about. It's the type of risk that you accept investing in this type of company. And then finally, the one that says if our contracted radiologists terminate their agreement with us, our business could substantially diminish. Now, that is also a risk, but I mean, yeah, that again is something that it's you cross that bridge when you get there, kind of thing, but you have to understand that the potential is there. So I get why they've listed it, but every business has risk. Let me see if there's anything else to highlight. Okay, so let me look at this risk. This one that mentions late payments from Ministry of Health and Wellness, insurance companies, or other large credit customers. As the number of cases and attendant revenues grow, we recognize that receivables from your large credit customers, if not collected in a timely manner, will significantly impact cash flow and could result in increased credit losses. So that might explain what we would have seen in terms of the bad debt that they have, or maybe the amount of money is outstanding. So there's that one. Let me see if there's anything else. Everything else seems kind of standard to me, right? Okay, so let me pause there for now, and let me try to get through some more questions to see if I can wrap this up shortly, okay? All right, so how much GMB clients do they need to apply for the minimum of 5,000 shares for the general pool to be oversubscribed? I mean, $10,000 by 182 million would be the answer to that question, right? Shelly, and the interview with the CEO is on Thursday. Let me try to bring up that slide again for you all to see. So we're doing the prospectus review today. We have the financials review tomorrow, and the CEO interview on Thursday. Okay, so these are the videos that we have coming out this week. All right, so next question. I feel like those are just risking. Yeah, so those are risks. Again, that would be there based on the type of company, type of industry, etc. Every single hospital doctor has to have some sort of factoring for malpractice claims. I think if there were maybe an abundance of them or something, seriously concerning about them, we probably would have heard about it, or they would have at least listed any cases outstanding in the prospectus, etc. So I didn't see any, but again, that's something that we can ask about. Renee is saying agreed to Marlene. It may be good to look at Elite's performance on the market to get an idea of the potential. Yes, so let me actually bring up the slide where it speaks to their competition in the market. I think that'd be a good one to check out. Okay. So the closest in terms of competition to them would be Elite, that has 3 branches, and it shows the services that Elite provides. And I mean, I'm not sure that they listed them in terms of order, but here's a list in terms of, so apart from Elite, all the other competition have 1 location. So Elite would be their largest in terms of second competitor, in terms of locations. All right, so let's see what Marlene is saying. I feel for both companies, the machines with their high depreciation and high maintenance costs will eat up revenue. So that is something that, again, we can ask about, servicing of the machines, maintenance, etc. That is something that will definitely impact things, but it's really about how it's managed. So, for example, the standard machine would need to understand like the lifespan of that machine, and things like that to know how to treat with that risk. Okay, so in terms of worrying, so Romario, it is very important to understand the type of risk you're willing to take when investing in a company. So if those risks are worrisome for you, see if you can get the information to address it. If you get the information and it's still a concern, then that company may not be for you. Okay. Okay. Well, Marlene, in terms of closing the Portmore branch, that is something we're planning to ask. I think they did mention a little bit about that. So they were over Portmore at one point, and then they would have closed that branch. I know I would have seen it somewhere. Let me see if I can find it. I think they had it in terms of their history. I'm just reading through to see if I can find the details of the Portmore location. I know they mentioned something about it though. Okay. All right, so let me bring that up here. So this is on page 48. Share my screen once more. So it says here, in 2014, the company was faced with the strategic decision to provide more access in Kingston and St. Andrew, where demand was growing at a faster pace than in St. Catherine. Despite a steady increase in case numbers at the Portmore branch, St. Catherine remained, at the time, primarily a dormitory community, with its residents traveling to Kingston to work, attend school, and do business, returning home after normal business hours. So they're pretty much saying is that the Portmore location was probably ahead of its time. They weren't seeing the response that they were hoping for, and they found that most of their patients were working in Kingston. So prioritizing the locations in Kingston and St. Andrew made more sense. And I guess they weren't getting enough business at the Portmore location to justify keeping it open. Omar is saying depreciation isn't a real cost. So that's something to note in terms of depreciation. It is an accounting function. After depreciation ends, you still have the asset, right? Whether can you sell that asset after it's fully depreciated, and at what value would be the question there. But I mean, that's something to consider as well. Meaning depreciation doesn't impact cash, I believe is also trying to say as well. Doug, in terms of selling agents, currently it's JMB Moneyline. We have not heard any other agent as yet. Okay, so what I'll do is close out here with just my thoughts about the company again. As I mentioned, there are good things to see, positive trends in terms of a growing number of scans being done. The new location does hold promise for them, so it's good. It will be interesting to see how the next year goes. So I'm hoping to see those numbers, or at least get some context as to how many scans, for example, have been done year to date, etc. I do think now we have a company, so I like with the fact that, for example, with RPL recently, and now for Apex, we have an opportunity to compare it with another listed company. So I think doing that comparison would be a good thing. So we can learn more about the company there and see at least within context. And I do think that it will be, I think the offer will be fully subscribed. How much is yet to be seen based on the amount they're being, the amount they're hoping to raise, and who I think will be investing. So for every other question, we'll ask the CEO on Thursday. We'll go through the financials a little bit more to see if there are anything else that concerns us. But I did mention directors' fees, and I'd like to understand what would be the policy going forward. The management of their receivables, that's going to be something to watch. And in terms of what was the other things? Salaries, in terms of that growth that we would have seen. Normally, for listed companies, there are more persons you may need on staff to fulfill some of the functions that may be needed, etc. But it's good to hear from the CEO some of these questions that naturally come up as we went through. So do I think the company is going to be around for a long time? Yes. Do I think the company has a clear competitive advantage? Yes. So it really now depends on how other investors feel about the company, etc. So we'll be saying more about it as we learn more. Okay. So hopefully this was valuable to you. It's good to see everyone here. Be sure to like the video, subscribe to the channel if you're new. We do have content that you'll be able to check out for past offers and so on. So if it's your first time, be sure to check out those other offers. And yes, I want to thank you for being here. I'm trying to remember, Renee, is there anything that I'm missing to mention? If you missed Grow Your Wealth Conference, the replay is still currently up. It would have been sent to your email if you registered, or if you subscribe to our mailing list, it was sent out there as well. We did see notice for our newsletter provider having to close down. We're using a platform called Review, so it's being shut down by Twitter, so we'll be using a new platform. Hopefully that goes well. Yes, Orville, I was planning for 30 minutes, but I unfortunately had to, well, not unfortunately, I had to extend it based on the type of questions that were coming in. I didn't want to leave you guys hanging. So, hopefully it was valuable, as I said before. So, yes, thank you. So our new coaching cohort begins in January 2023. So be sure to register. We have just a few spaces left. The registrations have been coming in. So if you're interested, register now. Register immediately. You have until December 31st to use our 25% discount code. That's Grow Your Wealth. And if you are interested in signing up, just be sure to submit that registration and we will contact you within a couple of days to have you fully registered. Okay? So, yes, thank you so much. We will see more announcements coming from us in the next few days. I want to thank you guys for watching, and I'll see you in the very next video.
Learning is the key to successful investing. And who doesn't want to invest in some way?
Here at L.E.A.R.N. Grow Invest, we focus on financial education, all with the aim of sharing our knowledge on personal finance, investing, and building wealth. We do this on the foundation of our faith in God.
If a more holistic approach is what you need, check out our Grow Faith-based financial coaching program.
Find out more about us at learngrowinvestclub.com
and follow